Are we live?
Yes.
Okay. Okay. We're live. Let's go. Well, welcome everyone. Want to thank you for joining our Facebook Live today. And, I just want to say, I know hearts are going out to anybody that is in Florida. I know that you all are really suffering with what's happened there. And my brother's also out there. He went up to Destin, lost his house entirely. So anybody that's out that way, I just want you to know we are praying for you, and we know that what you're going through experiences ourselves. So I want to thank you all for tuning in. This is Life Insurance Awareness Month, and I want to take this opportunity to speak with you and my good friend Howard Dvorkin, who's a CPA and a published author, as well as a frequent guest on major network and cable news shows. So he knows everything about getting out of debt and saving money. And of course, I've owned my own insurance business for 3 decades and counting. So you might think insurance and a CPA are going to be boring, but I don't think either one of us are boring. But you can tell
You're
me
definitely not boring, Vicki.
I'm not boring. I like to whoop it up sometimes, Howard, right?
You're
So let's just dive right in and have Howard introduce himself. And welcome, Howard.
Well, thank you very much. Following on what you said, our hearts go out to those that are victimized by this hurricane. We actually at Debt.com are located in South Florida, so we know very well what happens when a big old hurricane comes by because we keep getting hit year after year, and this one we were lucky to miss it. So unfortunately, my brother up in northern Florida are definitely getting pounded on. So our hearts go out, and certainly, people. This brings in a good place to and a good time to talk about the necessity of insurance because you never know. I mean, our slogan at Debt.com is "When life happens," and certainly, life just happened.
Yeah.
We are here. Myself, quick rundown. I'm a CPA, as you said. Have a couple books out there. I'm actually working on a third, but it's a labor of love. I've been getting people out of debt for over 30 years, or almost 30 years, I guess I should say. I think the amounts are 10 million and counting. Uh, my team and I, we have a very seasoned team for 30 years and we've seen it all. And people need to be aware, but more importantly, they need to be able to handle what life throws at them. And certainly focusing on insurance can do that.
Right. So I like your slogan, and I have another one: plan for the unplanned. I mean, and sometimes death happens when we're least expecting it. That cemetery is filled with people that weren't planning on passing away. So unfortunately, death is going to happen to everybody. And I know that sometimes people don't want to talk about it. But when you do have life insurance on yourself or the breadwinner or a family member, it can actually change their life because it's going to give them a tax-free benefit to them either replacing their salary or getting out of debt or doing all those different things. So we know this is the end of Life Insurance Awareness Month. We're approaching only 2 more days left, but I've also heard it called death insurance. And you and I have a great synergy regarding debt insurance and things like that. Um, and I just want to say life insurance is for anybody. Why people need it? It's to replace salaries. It's for mortgage payoffs. It's for college funding that possibly you didn't save for, and now the breadwinner is gone, and the wife or family have to, submit their kids to college with no resources. I believe wholeheartedly in securing the right plan. I'm seeing a lot lately. People were 50 years old buying a 10-year term, and now they're 60, and they're looking at me like, why didn't I get a 20 or 30-year term? And the answer is their advisor didn't advise them right. So getting the appropriate term length or permanent policy is so important, not just the death benefit, but how long it's going to be there for you. So, I'm sure you've seen, Howard, people that have passed and then the spouse is saddled with a bunch of debt because they didn't have any life insurance,
Well,
right?
there's lots of problems that happen when somebody dies, especially unexpectedly. Yeah, they still have to take care of their loved ones. You're not buying life insurance for yourself. You're buying it for those you love and you
Right,
care about.
right,
And you could find any reason in the world not to have life insurance. Can't afford it, tough month, my expenses are out of control. But guess what? Life does happen. And
yeah,
certainly, if somebody passes away, if you have young kids, you need it, certainly. If you have mortgages, you need it, school to pay for, college or even private school, whatever the case may be.
mhm,
Bills or need to be paid because your loved ones keep living even though you're not there to help support them. So
right,
certainly during this month, and it's a great month and it's a great topic, that people need to be aware of the necessity, and really insurance is a necessity for those people that are living, life on the edge and don't have millions of dollars saved up. This
right.
is a way to secure a future for the people you care about. There was an interesting survey because of all this inflation that we saw, that we're having, that we're experiencing. A lot of people are saying, I can't afford life insurance. And that is a huge problem because you don't know when you're going to need it until you need it, and it's
Right.
kind of like a hurricane, the hurricane of life hitting you, and people must continue to make those payments because this is extremely important, and you shouldn't forego or default from your premiums.
Right. So, and many people have potentially some insurance through their work. Our recommendation always is to secure a policy outside of the work. If you get retired or laid off, you lose that policy for most intensive purposes. You can't carry that on.
But the work policies, Vicky, don't even cover a lot. They're usually like
Sometimes
$50,000, and if you want, you could buy it up to a certain amount. But you're right; you should have an outside policy,
you own yourself. Right.
right? That you're in charge of making the premiums. So you got to be careful. What happens if the company goes out of business and they
Right.
didn't make your premiums for a couple months before they
Right.
went out of business, which happens?
That's right.
Very sad, very scary stuff.
Very scary. So you know how much I love insurance. It's crazy that I love it. And you are the expert on debt. So what are some of the scary debts you wouldn't want to pass on to your loved ones when you pass on?
I mean, listen, if you have student loans, you have to realize when people die, they die with debt. If they have debt, the debt dies with them unless they have assets. And the estate is responsible for paying those debts. Say if they have a student loan and it's $100,000. Say if they have a car loan and it's $10,000 or $20,000. Guess what? That all has to be paid before any distributions of the estate come to the beneficiaries. So
Right.
that is a very scary thing. Think about this. You have a $500,000 policy, but you have a couple $100,000 in outstanding debt. The estate is responsible for paying that
Right.
first. And that could be the difference between putting food on your table or not in this. So you have to be adequately protected. Make sure that you buy enough policy, enough insurance to protect the loved ones and cover the debt. And sometimes you need to review your insurance every single year with somebody that knows what they're doing so you can make those decisions. Don't be underinsured because
Right.
the worst case scenario, say you have a $250,000 policy, you pass away and you have a $250,000 worth of debt, your beneficiaries get nothing. So
Right.
be careful.
And also I want to make a comment on that. So many people wait too long to get life insurance, and then they might have some health issues or their age is older. And then if there was an illness and then they pass away, there's also the medical bills or, other debt, like you just mentioned, is going to follow with that family, and those need to get paid first. And if they were in a long-term care facility, that may or may not come out of that life insurance proceeds if they were, using your own money to pay for that care. So be super careful about just pushing this aside and think, tomorrow I'm going to do this, because procrastination happens to everybody. We're not going to wake up one morning and say, today's the day I'm going to buy life insurance. No, it's usually somebody passing away or a health issue. And then you say, you know what, I need to get insurance.
And
then
sometimes you can't get insurance, Vicki.
Right.
I mean, the saddest thing is when people come into my office at Debt.com and they charged up a ton of money on their credit card bills. There's very little income coming in other than to pay their existence.
Right.
There's no money to pay their credit card bills. And there's not a lot we can do. So you got to be adequately covered. You got to do an insurance checkup every single year to make sure that you're properly covered. I do want to ask a question, Vicki, because I think it's a good topic. What's the difference between term insurance, which you mentioned before, and whole life? Because a lot of people don't know the difference.
Yep. So I'm going to rephrase the word whole life to be more in the modern tense, which is called a fixed index universal life. So what that means is we designed that to age 100 or 120. So however
am I showing my age, Vicki?
You are.
Sorry.
So in any ways, you buy a policy and it's forever. So it's going to be more expensive. It's going to have some cash value in there, but I run that cash value very lean. I'm not doing it for the cash value. I'm doing it for the life insurance benefit. Now, permanent insurance is more expensive than term. So you can buy a 10-year term, a 15-year term, a 20-year term, a 30-year term. And what that means, if today I'm 60, yes. If I buy a 20-year term,
it's not so.
It's only going to cover me to age 80. So if I die at age 81, there's no coverage for my family. So what I do is I bought a permanent policy at age 40, and every 5 years I add on new term because my other terms are going to be canceling off. So I run a lot of life insurance on me. When I die, not if I die, my family is going to get whatever term and permanent I've bought during that time because I want to secure my health. I'm in good health now. I don't want to wake up and some of my terms have canceled, that all they've got left is the index universal life. So super important, your advisor, if you're not working with me, and please work with me, they're going to try to get you into something that they can churn every 10 years. So that means they get a new policy to write every 10 years. But what if you're uninsurable? Then you are knocked out and you have no coverage. So buy as long a term as possible if you can't afford a permanent policy. And then just know it's going to end most likely before your death if you look at terms.
Well, you need to also think about this because as you age, the premiums go up substantially because you're greater risk. Right now, term is relatively cheap if you're 40 or under. It gets very expensive when you're pushing 60, 70.
Yep.
So you have to probably take a look at that and try to get the longest policies that you can. Certainly review it on an annual basis. You should go with somebody you trust, such as Vicki. Hopefully you trust Vicki. But the fact of the matter is people need to lock in insurance. I personally do a 20-year policy, and I have them laddered. I have 3 policies. So if one expires, I still have 2 others, and then I renew that and then ladder out the rest, the other 2. So, but that gets expensive. And as I approach 60 years old, Vicki, the premiums are substantially higher. And you may want to look at a permanent insurance option.
So one thing I do want to correct or state, maybe you didn't clarify this, but once you lock in your age and your health, it does not go up. The only time it's ever going to go up is if it expires and you have to buy a new policy.
Exactly.
You want to add on another policy. So under age 60, we can probably do a 30-year term, which is ideal because then that will cover you to age 85 to 90. But you want to lock in as long as term as possible. Know that it's going to expire. If you are over 60, you can only get a 20 to 25-year term. So super important. Another thing I want to stress on is beneficiary updates. If you are married and all of a sudden find yourself divorced or single, widowed, you want to make sure your beneficiaries are updated. I can't tell you how many ex-spouses are getting life insurance benefits because they forgot to update their beneficiaries.
That also holds true with pensions also.
Yeah.
Because, and I've seen it where this is a terrible case. Somebody had gotten divorced, married to a woman, and ended up marrying somebody else, had children. The first spouse got the entire proceeds of the pension.
Yeah, so, or the 401k. So always update those beneficiary forms. So hopefully you guys are all learning a little bit of something right now. So Howard, I want to ask you, so many people might be juggling debts and think they cannot afford life insurance, especially with inflation the way it is today. So what do you think the best way is to assess your budget so you can find the money to buy life insurance? What do you think?
Certainly, this is, and I'm going to start this by saying the one thing you cannot afford is not to keep your policies current and not have insurance. I'm a big proponent of insurance, certainly if you have loved ones and family if you care about. You need to budget for it. It is as important as car insurance, as electric bill. You need to budget, figure out how much you're spending, and look at all the categories on Debt.com, and I'm sure on your website, Vicki, you have family budgets available where people could put their information in and figure out how much they're spending every month and make sure that is a permanent fixture in your budget that has to be paid. You can do without going to lunch every day or going to a sporting event, but you cannot be without insurance. So you need to make sure that you budget every time and budget accurately. And certainly if you need help budgeting, I'm sure somebody in your office can help.
Yes.
Budget, or certainly somebody at Debt.com.
Right.
That's a very important thing. Hey, somebody just sent in, Vicki, a question. It's an interesting question. Only you can answer it. What is the Be Your Own Bank life insurance program, and do you recommend it?
So meaning that you've got a bucket of money that you feel is going to go out to your beneficiaries upon your death and using dollar for dollar. Well, it all depends upon your estate and what you're worth. So life insurance is pennies on the dollar. So if you've got a $10 million estate and you say, you know what, my family doesn't need any more money, then maybe you're not the right candidate for life insurance. But you could take some of that money from your estate and quadruple it into a tax-free benefit. So I like using life insurance for taxes, estate taxes that might be due, for IRA taxes that might be due. Then the beneficiary can inherit that tax-free because that life insurance will get paid tax-free. So Be Your Own Bank, obviously everybody's different and individualized. I use the rule of thumb, 15 times your annual earnings is what you should have in life insurance to start the conversation with. So let's say, for instance, you're making $100,000 a year and you've got young kids. That's $1.5 million of insurance. That way the beneficiary can withdraw that $100,000 for 15 years to get that family protected. So I use that rule of thumb. If it's too expensive, we lower it down.
And the important thing is to remember that life insurance proceeds are tax-free. Right. So you're not going to have to pay tax on that. Mm-hmm. And actually, $1.5 million sounds like a tremendous amount of money, but in today's costs, it doesn't go very far.
Right. And to replace the salary.
go up. We're seeing interest rates go up. It could get eaten up. The one thing, and you know my wife, uh,
Yes.
Vicki, and I was lecturing her, of course, this morning actually, on don't invade principle. Never invade principle. You have to live off the principle where and invest it properly and safely so it generates money
Right.
to afford. So it doesn't mean that you have to take, if you have a $1.5 million policy, you could take 100,000. Maybe you invest that 1.5, and maybe it can generate the $100,000 a year. And still, at the end of the year, you still have your 1.5 million.
Right. Right.
So that's a very important thing. I know coming from a household that, I lost my father at a young age, and frankly, we didn't have a lot of money, but we did have that the insurance proceeds, and they did come in handy. They did come in handy, and people know that it's there. It gives comfort to people, but people need to be aware.
Right.
Uh, Here's another question that I see. Uh, should I wait, Vicky, to buy life insurance or apply for life insurance after I lose 50 pounds? Is there any thought process there?
Well, you first of all, you don't know what your health is going to be in a year from now. So my recommendation, get a policy that might be a little bit higher than it should be, and then replace it if you lose 50 pounds. But people in their minds say they're going to lose 50 pounds. It's tough to lose 10 pounds. So if you can do that, then we reapply with a new company and then you get the lower rate. But to wait, now you're getting yourself uninsured, and who knows what could happen to your health in that meantime. If you get cancer, heart disease, heart attack, whatever that could be, now you're going to be uninsurable. So I say don't wait.
I agree with you, by the way. You can always get a new policy after you lose a ton of
Cancel it. Right. Cancel the other one.
and cancel the other one. Another good question, and goes back to the term versus permanent insurance. If you own your own business, which is better for you?
Again, individual. I own my own business. I have both. So like you own your own business, you have both. You have a permanent and you have a term. So when my kids were younger, I loaded up more term because I needed to be sure they were going to be protected if I died early. Now some of those terms are canceling off, and I'm buying more insurance that has like a long-term care rider added on. So if I ever get sick and have to have any type of assisted living, it does have that benefit attached on. And those are the new hybrid policies. They're really great.
Okay. This is an interesting question that I see on the screen, and it says, if I have a big social media following and they always share GoFundMe accounts, do I really need life insurance because I'm thinking my followers will cover me? I think I could answer that. The answer is you need life insurance.
I'm not going to give you money because you weren't responsible on getting life insurance. The answer is no.
Right.
I mean, that GoFundMe is one of the biggest problems right now in America and across the world, that people, oh, because I didn't get health insurance, now I want you to pay my health insurance bill. No,
Right.
no, you take responsibility for yourself.
I mean, and you never know what the scams are either. So you need
Right.
to take good responsibility. You got to rely on yourself, because
Right.
at the end of the day, nobody's going to take care of you, your loved ones, the way you're going to take care of them.
Right.
Listen, insurance is a very tricky thing, and it's a very complicated financial product, and you have to understand the nuances. Term is relatively simple, but when you get into these permanent insurance, or what I refer to as whole life policies, which I'm showing my age, certainly they get confusing, and you have to be careful about the investments that you
Right.
put in there. And certainly, those investments are affected by sometimes the stock market. Can you talk a little bit about that?
Right. So you mentioned living off the interest that your accounts are doing. Right now, most accounts are down between 30 and 45%. I see investment accounts every single day. That's a problem if we want to live off the interest because it's not making any money. So, that's a challenge. If you're approaching retirement, there's other ways on protecting your income. And we do a lot of fixed index annuities because they just work. They're like a pension with your money. And you do spend down your principal, but guess what? It'll give you a paycheck for the rest of your life. And if you buy life insurance, you can replace that policy or that benefit with life insurance. So my viewpoint on this is spend every last dollar you have and buy life insurance and pass that down to your beneficiaries.
I'm being told we have a viewer question, and I don't know where it is. I thought it was illegal to deny somebody insurance due to illness or pre-existing condition.
We're talking about health insurance versus life insurance.
Right.
Yeah.
That is a very good question.
Yeah.
I will tell you, I've seen people denied for life insurance all the time. Certainly, your health has to take into consideration, and also, depending on your health and your health history, that affects your premiums. Correct, Vicki?
Right. Yeah, I've got some clients that have waited too long to get insurance, and now all of a sudden they get diagnosed with cancer, heart disease, diabetes, and they can only get a death benefit policy, like a burial policy of 25,000. So you want to definitely do this when it's not important, right? So if you're 40, 45, 50, and you're raising a family, and your health is good, that's when you need to get this. It's kind of like trying to get hurricane insurance after the hurricane's there. So you just got to take care of
the day before the hurricane hits.
Yeah, or a house burning down. Now I want to get, fire insurance. No, you get it when you don't need it. Then put it in your vault in your safety deposit box, and you hope you never use it.
Right. It is challenging. I mean, insurance, it's a necessity.
Right.
And let's face it, it is a necessity because without your income, it replaces the income that you're bringing in. And for God's sakes, if you have loved ones, take care of them.
Yep.
In this life and after.
That's right. That's right.
That's good.
So we're moving right along. I know we've written some questions out to make sure we get through all of them. So somebody wrote, my parents are on Medicaid. Do I still need life insurance for them? What are my thoughts? So Medicaid is different than Medicare. Medicaid states that we want the government to take care of our health insurance costs. Typically, if they're on Medicaid, they've already spent their assets down. And regardless if you need insurance for them, it's a personal decision if they're even insurable. So, that's kind of a loose comment, but we just need to address this one by one. Medicaid is different than Medicare.
I mean, I have seen in the past, Vicki, that, and I don't know how to digest this. Children of parents that are older take insurance policies out on these folks for the eventual payout.
Right.
The policies sometimes are expensive, but the benefit is significant. What's your thought on that?
So, again, if you've got the resources to buy life insurance on your parents that are healthy, why not? And if you add that long-term care rider on there and they ever get sick, you've got a policy. I was able to do that for my mom. I have life insurance on me. If I ever get sick, I've got that rider built on. But, it all depends upon if you can afford it. If you can afford it, why not? They're going to die. We're all going to die one day. So
say that. I'm not ready. I'm not there yet.
I'm not either. But one thing is happening lately with my clients is we're seeing a lot of sandwich generation. So that means, Howard, you're in my age group is taking care of our older parents, and we're still taking care of our children. So I have a seminar in a few hours, and one of the questions I ask in the beginning, people raise their hand if they're still paying their children cell phone bill, their adult children's cell phone bill, and almost the entire room raises their hand. And I asked them that question. So you're paying $100 to $300 a month for one or two or three children's cell phone bills, and you're sacrificing yourself for going out to dinner or what have you. So you just have to really realize that we're in this sandwich generation. We're still taking care of our parents. Some of us are. We're also taking care of our children, whether it's college or just helping them buy a house. And that may or may not allow us to justify life insurance. So if I put out, two or $300,000 on a parent, both my parents are deceased, but I might want to buy life insurance on them because I want that money back when they die tax free. Could make sense, right?
And frankly, that's what I did with my mother.
Mhm.
I paid for all the expenses that were covered by insurance. And
Right.
when she passed, the insurance came in. And I also paid for the insurance premiums,
I
which
did too.
were significant. But when she passed, it paid me back
Right.
all the money that I spent,
Yep.
which was nice. And then the remainder I gave to my sister because I didn't need it. But
Yep.
the fact of the matter is, you know, it'll reimburse you for those expenditures. And let's face it, in today's society, it's expensive to take care of aging parents. Very
Yep. It
expensive.
is. It's
And
very.
certainly that is a great question
Mhm.
that we see a lot. I mean, people certainly need to budget for life insurance. Think of it not as a luxury. It's a cost that you have to have. Not that there's wants and needs in people's budgets. And it's certainly not a want. It's a need. It's a necessity. And people need to view insurance in such a manner.
Yep. You're right. Moving right along. Thank you all for staying on. We've got a couple more questions we're going to get through. But one question I see a lot is, what's worse, having bad credit or no credit? What is your take on that, Howard?
Listen, no credit, at least you can repair it. You not that you can need to repair it, but you can build credit. So no credit is better than bad credit. Bad credit, obviously, you have to repair it. It takes time. If you do nothing, it rehabilitates itself in 10 years or 7 years, depending on what the item is in 10 years, if it's a bigger item.
Yeah.
However, certainly no credit is okay to have because you could go get a store card because they'll give them to anybody. And
Right.
there's all sorts of lending opportunities for people to build their credit with regards to utilizing uh, uh, prepaid accounts or prepaid credit cards and things like that. So there is a way to build up good credit over time.
Yep, there is. And get with you guys if you have that issue. So we're going to wrap up. I just want to mention that if anybody out there needs some help with your debt, okay, we've got an incredible team ready to help you. They should go to Debt.com/Vicki, and our team will help you with debt. And don't forget to go to codoinsurance.com for any life insurance, health insurance needs that you have. I'll make sure that you're handled with exceptional care because you are on this call today and referring us. So Howard, you're the best. I'm thankful for you, thankful for our partnership, and hope to all come to us if you need us to take care of you, right?
Listen, it's a great combination. It's a great team. You are the most knowledgeable person I know in the insurance business, and you're completely trustworthy, which is great to see.
Gotta have that.
Certainly, if people need debt, if they're challenged by their debt, we're here. We're here to help, and we've been here for 30 years. So I'm ready to serve as much as I possibly can.
You're the best. Okay. Good to see you all. Thanks for joining us. I got to get back to work.
Thanks, guys.
Take care. Bye-bye.
Bye bye.